Welcome to the Don't Trade Fade Show with Jason Shapiro.
Hello, today is January 13th, 2024. I'm Jason Shapiro with crowdedmarketreport.com. And welcome to the second version of what we are calling Don't Trade Fade. And last week, on my first Don't Trade Fade, I was very excited about this idea that Dan Nathan had bought calls in Nvidia, and I thought it was super funny because this is a guy who had been shorting Nvidia all of last year, and now he was saying buy calls. Well, as it turned out, that ended up being a great trade because Nvidia just went straight up. But I have to add something here. Dan Nathan, because he is on television, has to disclose the trades that he makes, and he does so right here. Okay, and nowhere on here is there a position for long Nvidia calls. So what he did there was he made a paper trade. And since this is my game, I get to make up the rules. And one of the rules is we're not going to try to fade paper trades. We are going to try and fade real money trades, because those are really the ones where people lose money. Everybody can make a paper trade, and that's simple. I'm going to stick to his actual trades, which are right here. And I made a little chart. He is, according to his disclosures, he has put an XLF, XLP, he has a put spread in ITB, he has a call in PFE, and he has a put spread in TLT. So I don't have the prices that he did these puts and stuff at, so I'm just going to track the asset. And then we can figure out later really what happened with the P&L. But essentially, these are the returns from January 1st to now. His portfolio, if you just own the cash instruments, or were short the cash instruments that he has puts on, is up 0.37%. The S&P is up 0.85%. So it's underperforming the S&P by a little bit so far this year, not including the fact that these are options, and if they expire worthless, then it's clearly a lot worse than that. But we'll figure that out as and when the trades roll off or he gets out of them. Okay? So that's how I'm going to track the Dan Nathan stuff. Only the real money stuff, which is all right here. So there's no argument about what it is. Okay? So that's Dan Nathan. And hey, great paper trade on Nvidia. Good on you. It's amazing what actually being bullish something can do to somebody. But what I wanted to do this week was the new Don't Trade Fade that I found. And I found this one. On CNBC now, they do these acronyms at the beginning of the year. They have all their people do acronyms, right? Because they have no ability to come up with any kind of original idea. So they're going back to like the whole Jim Cramer FANG thing. So they have everybody do these acronyms. And I found this person's acronym, and I don't know this woman, to be so consensus based on all the things that I hear, all the things that I watch on TV, and I listen to these people say, and all the things that I read. These are just massively, to me, the consensus ideas for this year. By value, by small caps, meaning Russell. Healthcare, oh my God, I hear that one every single day. Emerging markets and energy is another one that I hear every single day. Okay, so I took these and I picked the ETFs that best follow those kind of ideas, and I put them together. So we'll be able to track. This is the idea. We're going to track these fades to see how they do over time, to try and prove the point that consensus thinking doesn't work over time. So I took this and made it a portfolio. Those 5 ideas she had, and I just said, let's equal weight each idea, 20% of the portfolio in each one, and let's track it versus the S&P. So since the beginning of the year, this portfolio is down, let's call it 93 basis points. The SPX, as represented by the SPY, is up 85. So short this portfolio, long this, you're up, 1.78% this year, which is outperforming the S&P by 1% already in 2 weeks. We've already outperformed the S&P by 1% by being short the thing she wants to be long and being long the S&P against it. Now, traditionally what would happen is if the market were to go up, these things probably go up, but probably go up less than the S&P. And if the market goes down, then these things probably go down, and they go down more than the S&P. But so far, this portfolio has actually gone down while the S&P's gone up. So it's been not just a great hedge, it's been an alpha generator in and of itself. So that is kind of the don't trade fade. I would have a good look at that because I am telling you from my ability to read consensus, which I hope is good, these are some of the most consensus. You could argue some of the other major consensus trades are that the market has discounted in way too many Fed rate cuts. I hear that all day long by everybody. You could argue this. A lot of people are saying China, its time has come kind of thing. I've heard that so many times over my career and it almost never works. But have a good look at these because if these are what are in your portfolio, you might want to think about if you're comfortable being in what consensus is. Okay? So those are the don't trade fade ideas. We're starting to develop a process for this and that. Again, no paper trades, only actual trades. And we're starting to develop a tracking for this so we can see how it does over time. And that's it. I hope you enjoy that. Always happy to hear questions and comments. Check us out on crowdedmarketreport.com. And we're also on Substack and, we're on Twitter and all that. So I hope everybody has a good week, a good profitable week, and we'll talk to you again soon. Thanks.
Subscribe to Crowded Market Report by Jason Shapiro.